LG Balakrishnan, right, is the other stock that we're looking at. Now, this is the third consecutive quarter of a weak performance by the company. Their margins have declined. Revenue growth for the last 3 quarters has barely been 3 to 4%. B. Vijayakumar, the chairman and managing director at LG Balakrishnan Bros, joins us now to talk more about that. Sir, thank you so much for joining in, Mr. Vijayakumar. You know, I want to start by asking you about what's going wrong, because it's been 3 quarters now where you're unable to get above the 5% top line growth at a time when the auto sector is booming. Earlier, you had spoken about how, places like Europe are struggling a bit. But what went wrong this quarter? And will you be able to meet that 10% top line growth guidance that you had earlier spoken to us about?
We should do about 6 to 7%. 10% may not be possible, but we are aiming at about 7%.
Okay, so 7% growth. So you're scaling down your guidance to about a 7% growth on the top line in FY24. And is that a single-digit growth something that you see in FY25 as well? Do you think the slowdown that you're seeing in the business is something that could be protracted over the next couple of years?
Maybe for a year, but not beyond that. See, we had planned the increase based on industrial chain output from Nagpur, but the weather has postponed due to heavy rainfall. Our factory has been delayed. And the other reason that I would ascribe is to for the RSIAL, our steel company acquisition, has been delayed now by 3 years. And there has been no maintenance, no upkeep. So the court has now ordered it in our favor. But then we have to take it up, and the repairs, maintenance and all that is going to take another year. So we have to postpone all our projections a little bit.
Okay, all right. Hi, Mr. Vijayakumar. Good morning and good to see you in. Let's talk about the industrial chains plant, sir. That has been getting pushed back, as you said, because of weather concerns. Tell us, for when does it get ultimately up and running, point number 1. And what kind of revenue contribution do you see it give in FY25? And from there, how do you see it scale up, say, in the next 3-5 years? Because that's something that the street is banking on, the industrial chains business.
We will be running from April 1st onwards. Production will be there and sales will be there. And for the next year, we see a turnover of about 60 crores from there.
60 crores, all right. And how does it ramp up, sir, from there? And what could be the rough margins on this industrial chains business?
A lot of changes are there in Europe, so we have to wait and see how things will shape up. All this Ukraine war and all that, I don't know how it is going to settle down and how Europe is going to accept all this business.
Okay.
Earlier, you were talking about industrial chains doing 200 crores. When does that happen?
I would like it to happen next year, but I would have to see how it goes. I think it is still possible. If not in Europe, we should try to also supply the US. So it is possible, but there is a setback.
Definitely, there is a setback. We are seeing it in your operational performance as well. So you've scaled down your revenue growth guidance from 10% to 7%. Would you want to scale down your margin guidance as well? Earlier, you had spoken about a margin of 19 to 20%. But this quarter, you've exited at 17%. So where do you think you will end the year with? And what are you looking at for FY25 in terms of margins?
Well, if you go back, I've always said that our margins will be about 17%. And our margins now are at about the same, what I projected, 17%. Our net profit is higher at 9%.
Okay, so you're sticking to this number. 17% margins is something that you will end the year with, is what you're saying. But Europe, since the pressures are still there in Europe, and exports as a percentage of your total revenues is about 12% now. If this pressure continues, do you think it would be hard for you to maintain the margins at the 17% level as well?
It will be a little difficult. We may have to spend a lot of money on other areas. We may have to make our product more accessible to other markets. So we may have to do a lot of seeding. But I would still aim at about 10% growth. Though
10%?
we are temporarily down at 7%, we would still aim at about 10%.
10% growth for FY25?
Yes.
Got it. All right. Mr. Vijayakumar, when you've joined us in the past, you told us that one of your family members was selling, but you're hoping to go ahead and increase your stake. I'm going through your release and you've issued some warrants to yourself. Could you tell us, post this warrant conversion, how much does the promoter ownership go up by? And ultimately, where do you see this holding go up? I think you're at around 33.7%, the entire promoter holding. So post warrant conversion, where does it go? And ultimately, where does it go?
More than where does it go? I think you should ask me what I would like to have. What I would like to have is about 39 to 40%.
Okay.
Okay.
So right now, we're increasing by 1%.
By 1%, this warrant conversion will increase your stake by around 1%.
Yes.
So the remaining 5%, then what do you do? Do you issue more warrants or will you start buying from the open market?
Depends upon how much money I can put my hands on. That is my restriction. So whenever I have money, I'm going to, if it is a small amount of money, I'll buy from the market. If I can put together a package, then I would look at doing a warrant again next year or the year after. There's also a possibility of buyback next year.
Oh, okay. So you're looking at a buyback as well next year, but you are hopeful that you're going to increase your stake from these levels for sure. What is your target again? You said by the end of next year, where do you hope the promoter stake to be?
Please, not next year. Within the next 2 to 3 years, I would like to take it up to 39%.
Okay.
40%.
All right, all right. So within the next 2 to 3 years, you want to take the promoter stake to 39%. Got it. One final question on the balance sheet. Are you seeing a rise in debt? What is the absolute debt figure right now? And given the kind of pressures that you're facing, do you think you'll have to take on more debt?
We have very small debt. Maybe we will reach about 100 crores. Right now, I think it's at about 85 crores.
So this buyback that you're talking about, that's a possibility within the next 1 year and you will not participate, right, in that buyback?
No, we can't participate in that buyback. The regulations will not permit us, and we don't want to.
Yeah, because you want your stake to go up. So that's why I just want to confirm that. And it's a possibility in the next year or so, in FY25. Will you look at this?
Yes, next year.
Got it.
All right. This year we can't, because the issuing warrant, we can't.
Warrants, got it. Got it. Yeah, that's why I just wanted to check on that point. All right, Mr. Vijayakumar, thanks so much for joining in. You've scaled down your guidance a little bit. You're optimistic you'll grow by 10% in the next year. Hopefully, that industrial chain segment as well starts firing and margins will hold at around 17%. And you would like your stake to go towards the 39-40% in 2 to 3 years. For the time being, the stock is down 3.5%, but I think it's up 75% in the last 1 year or so. But let's focus on the big Nifty